The year is 2021. China, the undisputed titan of Bitcoin mining, sends shockwaves across the globe with an unprecedented nationwide ban. The world watched as hash rates plummeted and miners fled. But what if I told you that beneath the surface, a colossal reversal has been quietly unfolding? 4 years later, in 2025, new data suggests China is not only back in the game, but has covertly reclaimed its position as a major player, potentially controlling a staggering portion of global Bitcoin mining power. This isn't just a comeback, it's a silent economic earthquake. Welcome to Economy Rewind. Today, we're diving deep into China's clandestine Bitcoin mining revival, its astonishing potential market impact, the regulatory cat-and-mouse game, and what this means for Bitcoin and the global economy in 2025 and beyond. First, the problem. China's 2021 ban was designed to stamp out Bitcoin mining entirely, citing energy concerns, financial stability risks, and capital flight. The goal was clear: centralize control, eliminate perceived threats. At its peak, China accounted for over half, some estimates reaching 70 to 80% of the world's Bitcoin hash rate. Its vast, cheap energy resources, particularly hydropower in Sichuan and coal in Xinjiang, made it the mining capital. Then came the crackdown. Miners dismantled operations, sold rigs, and fled overseas, primarily to the US, Kazakhstan, and Russia. The global hash rate plunged by nearly 50%, a dramatic stress test for Bitcoin's decentralized network. But the narrative of China's complete exit was short-lived. By October 2025, data from Hashrate Index reveals China has stealthily climbed back to third place globally, accounting for around 14% of the total Bitcoin hash rate. Some industry insiders even suggest the true figure is far higher, potentially up to 70%, when considering Chinese-operated overseas mining pools and relocated ASICs. This is a quiet, yet monumental shift. So, how did this happen? The framework is simple. Economic incentives trump regulatory bans, especially when cheap energy is abundant and enforcement is flexible. Provinces like Xinjiang and Sichuan, rich in wind, solar, and hydropower, often produce more electricity than they can transmit to urban centers. This stranded energy becomes incredibly cheap, a gold mine for clandestine miners. Miners are leveraging this surplus, often striking under-the-table deals with local officials, or masquerading their operations as legitimate data centers to capitalize on China's AI boom. Hardware sales confirm the trend. Canaan Inc., a leading mining rig manufacturer, reported that China accounted for over 50% of its global revenue in Q2 2025, a stark jump from just 2.8% in 2022. So, what are the present-day implications? This resurgence provides significant demand and price support for Bitcoin, injecting more industrial firepower into securing the network. However, it reintroduces concerns about network decentralization. If a significant portion of hash rate is concentrated in a country with an officially hostile stance, it could lead to market fears and volatility, especially amid geopolitical tensions. The regulatory landscape is a complex dance. While the national ban remains, enforcement has undeniably softened. Experts like Patrick Gruen from Perpetuals.com call China's mining resurgence one of the most important signals the market has seen in years. Hints of a policy shift are also seen in Hong Kong's stablecoin framework, which took effect in August 2025, and Beijing's review of yuan-backed stablecoins. This suggests a growing, albeit cautious, tolerance for digital assets within China's broader policy sphere. Looking to 2025 and beyond, China will likely remain a significant, albeit underground force in global Bitcoin mining. The economic incentives of cheap electricity are simply too powerful to completely eradicate. The tension between environmental targets and economic opportunities will continue to shape policy, possibly leading to a nuanced stance where the ban persists officially, but localized tolerance allows operations to thrive. China is also set to amend its anti-money laundering regulations in 2025. For the global crypto market, this means increased competition for miners worldwide and a reinforced narrative of Bitcoin's resilience against state intervention. However, it also demands vigilance regarding the centralization risks. China's Great Reversal proves that in the world of decentralized finance, true control is an elusive concept. The dragon may have gone underground, but its roar in the Bitcoin network is louder than ever. What do you think this means for the future of Bitcoin? Let us know in the comments below.